Okay, what is SRS? SRS stands for Supplementary Retirement Scheme. Okay, just take note, although there is a retirement scheme here, but they are not 100% is fully focused on retirement. There are some element on inside. So SRS is a government-led initiative to help Singaporeans to hold for retirement planning. And the difference compared to the CPF is SRS is on voluntary basis. So you can decide whether you want to contribute or don't contribute, not like the CPF. When if you're working, you are compulsory to contribute to CPF. But SRS is 100% voluntary. Okay, so take note a few number here for Singaporean, 15,300. Okay, there are some formula to calculate this 15,300 for Singaporean and also the PR. Okay, I will not go through this calculation because this is not a mathematics class or whatever thing. For you, you just remember 15,300 as of today. It may increase in future. I do not know. And the other number for you to take note is whatever money you move to SRS account, the interest rate is only 0.05%. Okay, do take note of that one. All right, because of this 0.05% interest rate, basically whatever money in your SRS, you'll be eroded by the purchasing the inflation, because your purchasing power definitely you'll be reduced over the long term. So that is why it is very important for you to really try to optimize the SRS return as much as possible, at least to beat the inflation. So who are eligible? Basically, almost everyone in Singapore citizen, Singapore PR, and also foreigner who work in Singapore may make the SRS contribution in the year. So take note, the money must reach your custodian bank. All right, there are 3 banks in Singapore you can open your SRS account with: DBS, OCBC, and UOB. Only 3 banks. And if you want to contribute your SRS money, your money must reach the bank by December 31st in order to be eligible to the tax relief this year. And whoever contribute to the SRS must be at least 18 years old, not an undischarged bankrupt, not having a mental disorder, and capable of managing yourself and your affair. Okay, all this information basically you can get it from the IRAS website. And if you are Singaporean and Singapore PR, just as I mentioned already, 15,300. If you are foreigner, the cap is 35,700. So this is the maximum contribution limit per year. So if you have not contributed to any SRS by now, just take note that what you need to do is in December itself, you do some calculation on your tax relief and do some tax planning. You can one shot top up 15,300 into the SRS account. So year end, if you need to have enjoy tax saving next year, you need to reserve this cash at the end of the year. So cash flow planning is important. For foreigner, the number is 35,700. Okay, just pay attention to these 2 numbers. Okay, what are the benefit and also limitation of SRS? So basically, the biggest benefit for SRS is a tax saving. It's a tax saving. It's not so much on the retirement. Okay, basically how they do it. You can enjoy your personal income tax relief when you are contributing your SRS. But do take note, if your personal income tax relief already hitting the maximum cap of 80,000, if you top up your SRS amount, that will not help you. Okay, in short, if you have already hit 80,000, you do not really need to contribute to your SRS. Okay, because that will not help you in any tax relief. At the same time, whatever investment income or investment return generated from SRS, they are tax-free. And just take note that there will only be 50% of the withdrawal from SRS are taxable at the retirement. Okay, these are tax benefit. This is the biggest benefit for the SRS contribution. And what would be the limitation? So the limitation would be whatever money in the SRS account can only generate the interest rate at 0.05%. Secondly, you can only contribute up to 15,300 for Singapore citizen and Singapore PR, 35,700 for foreigner. So if you have in the high income bracket, you want to contribute more, you cannot contribute. No way you can contribute more than 15,300. So that is a limitation. And when you want to withdraw money, yes, you can withdraw money from SRS. Okay, that is a slight advantage compared to your CPF because CPF is one way. Whatever money go into the CPF, you can either withdraw at 55 years old or maybe 65 years old when the CPF life kicks in. But SRS, you can withdraw. For example, if this year you contribute SRS, and next year, due to whatever reason, you have to withdraw the money from SRS. Yes, you can do that. But on the early withdrawal amount, there will be 5% penalty. Okay. And whatever money you withdraw from the SRS for that particular year, that will be taxed on 100% of the withdrawal amount. Okay, so these are the limitations. You have to pay attention to this withdrawal rule. And due to some of the situation or circumstances, you also can withdraw the SRS. Okay, either there will be tax at 50% of the withdrawal amount or 100% of the withdrawal amount. It depends on the situation. Okay, upon death, medical ground, you need some money for your medical expenses, and or have a bankruptcy and full withdrawal by a foreigner. For example, after a foreigner work in Singapore for many years, then they want to return to their home country, they are able to withdraw the SRS money fully. Do not need to wait until the retirement age. Okay, so this is the visual format to let you know that if you keep your money in an SRS without doing anything, okay, basically over the 10 years, assuming you are contributing up to 100,000 in your SRS account over many years, after the 10 years, the interest you earn only 501, okay, based on the initial capital of 100,000. Okay, but if you are able to look for some of the investment option, then you can generate return assuming 4% annual return over the 10 years, you get $48,024. So because SRS has a feature of soft lock and discourage people from withdrawing money freely, so your investment horizon tends to be longer. So over the long-term period, you would be able to ride through the volatility and let your investment grow consistently. So this is another chart on table, right? Assuming SRS without the investment basically is this curve, right? Almost flat over 20 years. Okay, so if you invest, look for something to invest at 4% over the 20 years period, it will be 219,000. If you are able to identify even more aggressive that kind of investment, for example, equity, and the equity portfolio able to generate 8% per annum return over the 20 years, your 100,000 you grow to 466,000. Okay, so that is a beauty, or that is one of the important thing to take note when you deal with your SRS money. Okay, and also one more thing is please pay special attention to the inflation in Singapore. So I just purposely extract out on the food inflation. You can save on the transportation, not buying a car, or you can live a frugal life, living in a HDB, or keep your living expenses low. But no matter how much expenses you keep too low, you still need to eat every day. So whatever thing you do to maximize return, just pay attention. You have to beat the food inflation. So at the present moment, the food inflation in Singapore is about 4.5%. Okay, based on the latest data. Okay, so over the long term, if the inflation really start to come down over the long term inflation rate of 2%, you still need to make sure your SRS money at least to beat the long-term inflation rate of about 2%. Okay, so in short, keeping money in the SRS doing nothing is not an option because you'll be eroded due to the inflation. Tax optimization using SRS. Okay, so I will go through a few examples here. If you want to take a paper, I would suggest you take a paper. You have to do some calculation. Go and also go and take a calculator. Okay, so this is a sequence, right? For example, in this case, Mr. Tan is a Singapore citizen or Singapore PR. He make a contribution of 12,000 in the year. Okay, 12,000 is lower than the 15,300, so he can contribute. Okay, and what after he contribute in the year, the SRS operator in this case will be either one of the three banks, DBS, OCBC, or UOB. They will provide the contribution detail to the IRAS. So you do not need to do anything. Once you contribute to your SRS account, the one of the three bank, they will provide your contribution detail to the IRAS. So next year, when you receive your notice of assessment, automatically you can see the tax relief of 12,000 will be automatically captured under your NOA. Okay, just take note that the personal income tax relief is 80,000. Okay, so plan your relief properly. This is an example of a notice of assessment. Okay, by right and by now you should be quite familiar of this format, but just in case that some of you never pay attention to it, I will go through this one slowly so that hopefully after tonight webinar you understand how to read this notice of assessment and know what are the important information you have to pay attention to. So under the NOA, there are basically three buckets. One is the income. Register where are all the income come from. Your income can be from employment, can be your property rental income, and can be your interest from somewhere. Okay, so everything will be automatically captured under the income, or you have to declare if your company did not opt for auto inclusion. Then the second thing will be the deduction. This will be the tax relief deduction. There are many of the category of a tax relief. Okay, I will not go through all of them. Your financial planner or financial advisor, if they are qualified, they should be able to advise you how you can optimize your tax relief and save tax. Okay, they're supposed to do it. All right, if you don't do it, I suggest you look for another qualified one. Okay, so if you automatically include your SRS money in your into the bank, you will see the SRS line here, SRS contribution, and that will be the amount. Okay, after that, they'll automatically calculate what will be the total tax relief. In this case, after adding up all the relief here, the total tax relief is 40,760. Okay, so just take note, this deduction tax relief is without SRS. Then after that, they use the income minus off the deduction. Then you will see the chargeable income. The chargeable income in this case will be 124,240. And this is the tax bracket. You need to look for a tax bracket. For example, first 120,000, you'll be 7,950. This one you do not need to calculate. IRAS already give you the number automatically. Okay, what you need to do a calculation is the remaining of the 4,240, because it's 124 minus 120. Okay, you'll be taxed at 50% tax rate. Then you add up these two tax amount. This is a total tax payable for the year 2021. Okay, now I'll go through detail. With and without SRS contribution, how you can achieve the tax saving. Okay, this is table. Exactly the same example without the SRS just now mentioned. So 8586, 8586, this is without. Now, if you contribute 15,300 to your SRS, your tax relief, you'll be increased to 56,060. Okay, it's basically from here. Your original tax relief plus 15,300 to be 56,060. Then the chargeable income will be 108,940. You can see clearly here, the chargeable income has dropped. Okay, and when this chargeable income drop, if the chargeable income drop to another tax bracket, which is lower tax, because the original tax bracket is at 15%. When your chargeable income drop and you drop to the lower tax bracket, you'll be taxed at 11.5%. That means your tax rate is lower. So in this case would be the first 80,000 of 108,940, you'll be 3350. Then the remaining of the 28,940, you'll be multiplied by 11.5%, and this will be a tax payable. Okay, you can see from here, without SRS, you'll be taxed at 15%. With SRS, will be taxed at 11.5%. You add the whole thing up, you can see that without SRS, you have to pay 8586. With SRS, would be 6768.10. So 1 year tax saving is $1,907.90. You just imagine if you never do the tax planning through SRS for the past 10 years, okay, basically you are throwing, not say throwing, you're contributing to the nation building. IRAS you thanks you because you are contributing 19,000 to the IRAS, okay, for the national building. Okay, so this is a tax optimization. I'll give you another example. All right, before I move to another example, this is the resident tax rate for a different tax bracket. So in short, the summary is using SRS as the tax optimization tool. Okay, there are some other tools also. Your job is to move your tax rate to the lower bracket. That's your objective. If you're able to have a lot of tax relief, you move from 15% to maybe 7%. Okay, that's good job. You can save a lot of tax. Okay, that's the gist of it. Now, this is another example for a foreigner. If a foreigner never contribute to the SRS, okay, so based on this case, let's say his income is 500,000 and 570,000. Okay, and the tax relief, same thing, similar, 40,000, and chargeable income 529,240. So the total tax payable for this foreigner will be 90,875.20. Okay, if he contribute the SRS, his total tax payable for the year will be reduced to 82,000. Okay, which is equivalent to $8,196.40 per year. Just imagine if a foreigner here for the past 10 years never contribute to SRS, never do the tax planning, 8,000 over dollar multiplied by 10 years is 80 over 1,000. You just imagine how much a tax saving this foreigner can save. Okay, so the next year onward, there will be another additional tax bracket taxing the rich one. We have a 23% and 24%. So the job, again, same thing here, is that we try to move to the lower tax bracket as much as possible for the tax saving. Okay, I have gone through the example. Hope you are able to grab a little bit gist of it and know how to do some calculation. Okay, this is your own money. If you don't do a calculation for yourself, you don't plan for yourself, nobody can help you. Okay, so the key message here, before you decide whether you want to contribute to the SRS or do want to contribute SRS, these are the main consideration. Okay, the reason being is you need to manage your cash flow. If your cash flow already very tight, and I totally understand it's quite difficult for you to set aside maybe 15,300 or 30 over 1,000 set aside, then lock it there, and you are not able to have a better cash flow situation. So it's very much for you to determine contributing and not contributing based on your cash flow situation. Okay, assuming your cash flow is okay, your cash flow is okay. This is the decision whether you want to set aside 15,300, because 15,300 you set aside in the SRS, the money still belongs to you. still belongs to you. The 15,300 is only set aside and leave it there and until the retirement age before you can withdraw out without any penalty. Okay. Now, and the other scenario, you do not want to contribute. You want to have additional cash flow so that you can spend. You can go holiday, 15,000, and you'll be taxed maybe 2,000 per year. This 2,000 per year tax you give to IRAS is an expense. It can never come back. Once you spend it, once you pay to IRAS, it can never come back. So it's very much depends on whether you want to save it for future or you want to spend it now. Okay, but it's very much depends on your individual cash flow situation. So you have to look at your individual cash flow. And the SRS money only return at 0.05%. You need to know how to select the asset class which can beat the inflation. Okay, minimum beat the long-term inflation of 2%, food. Okay, minimally. All right, if you can beat higher, then go ahead. And the other third key message will be there will be soft lock for the long-term retirement. Okay, it's long-term and 5% penalty and tax apply for early withdrawal. Okay, so do take note on this three consideration, this three key message when you do your SRS planning. So what would be the investment option for the SRS money? Okay, this is how you should do it. Okay, assuming you have decided to contribute to your SRS. Okay, the next thing is how to optimize your SRS saving. So first thing first, you have to define clearly your objective. What do you want to do? Do you want to invest just for collecting dividend, or do you just want to set aside maybe 20 years later you have a regular payout, and or do you want to go for very aggressive that kind of growth? So once you define the objective, the next thing here is you need to review your current financial situation. You understand the risk profile and also determine what is your investment horizon, because all these things will determine what kind of instrument or investment or insurance is suitable to you. You need to know this thing first before you go in to decide what you want to do. Okay, many investors or many people, they don't do this portion and straight away just based on recommendation or go for this investment, buy this insurance without aligning the objective. Because after you define the objective itself, you need to check these few things, whether this investment and insurance is suitable to you. Because once you go in, just take note on a soft lock. Some of them soft lock, some of them, if you want to have an early withdrawal, there will be serious penalty. Okay, there will be a very heavy deduction upfront. Okay, so you immediately lose money. You need to check whether the investment or insurance is suitable to you, and what are the benefits for you, and what will be the horizon. Okay, is it 5 years? Is it 10 years? Is it 15 years? Is it 20 years? And this thing is very much depends on individual also. When you are moving into retirement age, probably your time horizon maybe 5 years, 10 years. But if you're still young, you started contributing the SRS since maybe 30 years old, you have 20 more years or 25 years, 30 years to go, then you can have a longer time horizon. Then you can look for other product that meets your time horizon. Okay, then after that, you have to monitor to see when because some of the instrument itself, they are mature in 5 years, some mature in 10 years. Okay, you need to see that how are you going to maybe renew or reinvest your insurance or investment portfolio. Okay, so if you want to learn or want to get more information, okay, all this information is under this website. Okay, so this is the QR code you can scan. You go to this website, you can see a lot more information over here. Okay. Now, the investment option for the SRS money for the insurance portion, insurance, there are many types, and the feature are different. Some insurance, after you invest on a certain period, they will pay you one lump sum. For example, you invest in the insurance, 20 years later, they'll pay one lump sum. But some of you don't want to have a one lump sum payout. You want to have a regular payout to supplement your CPF life. Okay, so you can choose all these kind of different product here. So there are some remark here. I'm not going through all the remark here. There are some pros and cons. So you have to check the remark and see the suitability. The information is all in this link. So just pay attention to some of the lump sum payout. Some of them is the non-guaranteed payout. Some of them is a guaranteed payout. And non-guaranteed payout, basically you can invest in a ILP, investment link policy, because they have a growth element there. And if you want to have more stable that kind of income, more guaranteed that kind of income, you can focus on the endowment plan. So endowment plan basically is a wealth preservation tool. You don't see a huge growth, but at least your capital more or less you'll be quite consistent or protected. And or for the regular payout, you have the annuity plan. Okay, for the lifetime payout, this is quite similar to CPF Life. But CPF Life, we have certain amount. If you do not have enough CPF Life payout, you can use the annuity plan as a supplement to top up your retirement income. And some of them not paying up to a true life, the whole life, they only pay maybe 15 years or 20 years. So this is a limited time payout. So use all these kind of different insurance element to do a mix and match when you go to the retirement. As for the investment, so under SGX, there are many investment products. You have a stocks and shares, you have a bond, you have the ETF, and you also have a REITs. So on the bond side, you also have a T-bill, you also have a Singapore saving bond. Okay, so there are many type of instrument for you to choose. Some of them give you a more stable income, some of them give you a higher return, some of them you have a lot more volatility. In terms of the price, some of them no price volatility. So different investment class or asset class, you different that kind of features and different that kind of risk and reward profile. Some example, on the counter in the SRS, which has been the most investor using the SRS to invest in. On the stock side, you can see that actually the Trade Singapore Bank, most people in Singapore, they use the SRS money to invest in the Trade Singapore Bank. Many will be more on the dividend focus, and followed by SIA, Capital Corp, Singtel, SATS, ST Engineering, so on and so forth. And you also can use the SRS money to invest in the ETF. So the top three would be Lion OCBC, Hang Seng Tech ETF, Spider Straits Times Index ETF, SPDR S&P 500 ETF. And these are the ETF, the top three in Singapore Exchange. And the yield comparison. So at the present moment, the T-bill, 1 year T-bill is 3.83%. And compared to others dividend stock on the Singapore Exchange, all right, you can see that DBS, UOB, OCBC, they have between 4 to 5% range. There are quite a number of dividend stock at the present moment offer a quite a decent dividend, okay, due to the recent sell-off in the stock market itself. For REIT also another sector which under a severe pressure. So you can see that some of the US commercial REIT, Manulife, Prime US REIT, Capital Pacific, all due to the serious price sell down, the dividend yield more than 20%, some of them 50% and 89%. Just take note that all these dividend yield number, they are lagging. So moving forward, some of the REIT may not be able to pay such a high dividend, and the dividend yield will drop. Okay, but no matter how, actually at the present moment, in summary, the Singapore REIT sector is pretty attractive because the Singapore is selling at a huge discount. At the same time, the dividend yield is pretty decent. Okay, so it's a good time for you to lock in the current yield at the discounted price if you're planning for your long-term retirement. Okay, and also different investment asset class got different risk and also return. Okay, this is the snapshot of what are the investment SRS can do and can or cannot do, and what will be the risk. So you can see from here that on the right hand side, I'm referring to those investment which is pretty low risk, but when the risk is low, the return will be low. So for the capital protected one would be more or less mainly from an insurance side. So there are some product, variable annuity, endowment, fixed income. You can use a SRS money to invest. And bond, you also can use a SRS money to invest. REIT, same thing, and also equity here. For those higher risk that kind of asset classes and also investment for accredited investor, SRS money is not allowed. So if you want to use your SRS money, you can only participate. The higher risk will be the stocks and equity area, and risk and followed by bond and also some insurance. So the risk and reward are different. So what are the steps to invest your SRS money? So if you have not opened any SRS account, so these are the few steps you can just pay attention or jot down the steps. First thing first, you can go to any three SRS operator, mainly three Singapore bank, DBS, OCBC, UOB, and also DBS, UOB, and OCBC. You can go to their website and you are able to open online. So it's very easy to open an SRS account. After you open your SRS account, you have the account number. Next step is if you have any broker account, once you open a broker account, you need to link your SRS account to your trading account. Okay, if this one links successfully, and whenever you buy any stocks or bonds or REIT through your broker, there will be the option for you to choose whether you want to pay by cash or pay by SRS. You can choose. If you link it successfully, or the underlying stocks or REITs, they allow you to use a SRS to invest, then you can see the SRS there. Okay, so you will not miss that. So it is quite straightforward. But more important thing is you must link it properly. Then once you link it properly, everything will be more or less automated. Okay, so where you can see the statement you're holding, once you place a trade, you can either see it on your custodian broker, or all the holding itself. You can also see on your SRS operator the statement. Okay, I'll pause here for a while if you have any question, and this is the slide and for the pigeonhole for you to scan the QR code and post your question there. Okay, I'll move on. So what is the role of a SRS in the retirement planning? Okay, because the SRS, the holding horizon is pretty long at 63 years old now, and some of you opened previously, the retirement age for SRS is 62. That means at 62 years old, you are able to withdraw your SRS money. Okay, so this is how you can build your retirement income. Basically, at the retirement, what we need to do is we need to build up the multiple source of income. So the most basic level will be the CPF Life. So in example, in this case, you'll be CPF Life, you give you the money income of 1,500. The next layer, you can use the insurance plan or annuity, because insurance plan or annuity, you can use SRS to build it. So when you reach maybe 65 years old, you should be able to get a maybe $1,000 per month payout. Okay, it depends when you want to pay up. You can set it at 65 years old, set it at 70 years old, set it at 75 years old. It depends on you. That's the reason you can plan. You need to map out when the income coming in at your retirement age. Then the third layer would be more or less on the shares and dividend stock side or REITs. So what you can do is you can, because every year you can contribute 15,300 or 35,700. So every year you can start investing in some dividend generating stocks. So when you hit your retirement, you are able to get the monthly dividend income of $2,000 in this example from at your retirement. And level four, you can't use the SRS at all, because level 4 you'll be alternative investment, which is a higher risk. So if you do not have enough resources to build level 4, is okay. But no matter how, what you need to do is you have to focus on level 1, 2, 3. Okay, and defining what would be the income generated from each of the level. So level 1 have one disadvantage, which is not inflation adjusted, because CPF Life is a perpetual and also fixed amount. Annuity also fixed amount. You don't give you the growth element. It's not hedged for inflation. Only level 3, if you are investing in dividend stocks or REITs, that can give you inflation hedge account dividend, because over the long term, due to inflation, the business also doing well, the dividend you increase over the long term. So you use a level 3 to build growth in dividend that kind of portfolio, and at the same time hedge inflation. After you do it, this one plan properly, and more or less you know that at the retirement age, you should be able to get this kind of retirement income every month. So this would be the last slide on what you're supposed to do. So if you are still not sure whether you should contribute SRS or not contribute SRS, I just put down a few key points. You have to take action by December 31st. Okay, I repeat again. The money has to reach the bank or SRS operator by December 31st. So when you contribute your SRS to your internet banking, if you click on December 31st and December 31st is on a weekend, you cannot reach the bank, because weekend bank not working. You cannot reach the bank by December 31st. Okay, so pay attention to this one. And before you do any contribution, please do know how to estimate your personal tax relief for next year. Okay, so this year you have to calculate what would be your income coming in, what would be the tax relief you have to do it, and what would be a chargeable income. Then look at your tax bracket to estimate what would be your tax payable. Okay, you have to do this. If you found that you already maxed out your tax relief to 80,000, then you do not need to contribute SRS, because that will not give you any tax saving. Okay, so you also can use this income tax payable estimation to decide how much SRS you have to contribute. Not necessarily you have to contribute up to 15,300. If you are very close to the 80,000, right, maybe you can just contribute 10,000 just to meet the 80,000 tax relief limit. Okay, so this one is flexible, you can control. Then after that, after your contribution, you have to start thinking, what would be the solution? What would be the product you want to go invest your SRS money? Do you want to use the insurance to build out your retirement income for future, or do you want to use the investment option? So you have to decide which option you want to use. Okay, so again, this is a resources. You can go and read more about what to do, and start to take action for yourself. And additional resources you can refer to, you can visit the SGX Academy website, sgxacademy.com/SRS. Okay, there are some article on the SRS site. Or you can scan the QR code here on the SGX Group on Telegram. You can join the Telegram. So as and when there are some seminar or some new information or some news on the SGX, you'll be update, keep posted. So there are two QR code here. One is SGX Invest. The other one is a My Gateway newsletter. Okay, so I hope this webinar give you some overview on what you can do with your SRS money. I hope this webinar is helpful. And if you are able to do it yourself, then you go ahead and do it yourself. If you find that it's still very difficult, you do not really understand, you can contact me and I will see how I can help you. So this is my QR code. If you want to reach me, you can scan this QR code to book an appointment with me, or you can drop me the email at kennylaw@ffpl.sg.